We are probably in one of the most crucial weeks ever for Bitcoin, gold, and stocks. As we all saw today, gold ended the week at new yearly highs above $1,750 per ounce. And interestingly enough, Bitcoin came up, as you can see, to fill this CME gap up to 9,800. And of course, almost reclaiming the $10,000 level. We have a lot of on-chain metrics to talk about today. And we're also going to be looking at Bitcoin above this current macro resistance level and why this is currently extremely important for Bitcoin's next move. And we're going to talk about whether or not we're going to see another quick dump down or if we're going to continue above 10,000 and possibly reach the $10,500 resistance level that we've all been talking about and looking at for quite some time now. So I have a lot to go through today. We're going to take a look at gold and stocks as well. But first and foremost, I do want to bring up this chart here to keep all of the things on the table for everyone. Understand that we have a gap here at 11,700 all the way up to around 11,875, and that this is the next CME gap that Bitcoin can potentially come up and fill. But the real question is whether or not we're going to just go right up to that gap and fill it, or if we're going to see any lower levels, as a lot of people are wondering whether or not it's a good time to buy into Bitcoin right now as we're approaching that $10,000 big even once again. So we're going to look at a lot of different puzzle pieces on the table because, to be quite honest with you, there's a lot of bearish and bullish puzzle pieces on the table. And of course, a lot of this I think will unfold as we start to see this next week come to fruition, because we have a lot of key levels being tested right now, not just for Bitcoin, but alongside gold and stocks. So first and foremost, I do want to bring up this chart here, which of course is my personal chart, and talk about this flag that's currently forming, because as we all know, the last time we saw this flag form, as you can see here, we eventually broke down. And of course, right now we're forming a very similar flag at the same resistance level that we were here in early May. And of course, the big question is whether or not we're going to come down and see a dump just like we saw here on the weekend, which created that CME gap that we eventually came up to fill, or if we're going to break up to the upside. And so I think the key resistance level to watch right now is going to be around that $9,700 level. And the reason I say that is because if you look at the market structure from the past here that eventually broke down, it's very similar to the type of market structure that we're seeing here right now. If we were to go ahead and draw the same flag over here that we have currently drawn out, what you can see is if we were waiting for this flag's confirmation to go ahead and get into a Bitcoin long, as that resistance broke, then of course we most likely would have seen that $10,500 level up here, where we know there's another major resistance level as well as some macro levels that need to hit in order for us to see higher levels above 10,500. And of course, this flag never broke out to the upside. It actually went ahead and broke down. And of course, right now we're watching that same pattern form here at the same exact highs. And of course, right now you can see Bitcoin is kind of going back and forth between this major resistance level, the one in bold, but it has yet to go above this flag. And so I believe that there are a lot of things on the table right now. A lot of things are bullish and a lot of things are bearish. And if you want to wait for confirmation, the confirmation is going to be around that $9,700 level for us to see that $10,500 level. Because in my opinion, if Bitcoin is able to go ahead and breach through this, then it doesn't have that much resistance all the way up to that $10,500 level, where we know a lot of people were waiting to see this area in order to confirm a more longer term breakout above 10,500 that could potentially take us to the $11,800 CME gap and even further. And so realize that right now we've talked about Bitcoin potentially decoupling away from the stock market and recoupling with gold. And that's a very interesting thought, knowing that gold, if you look at its chart, you can see today we broke out of this bullish symmetrical triangle that was forming, and we were consolidating above this major resistance of 1680 that we were watching over the last 2 weeks. And of course, now that we've broken above that and formed a new high, that marks a new yearly high for gold. And of course, if we look at the fundamentals of how everything is playing out, realize that when we look at the SPY, which is the code name for the S&P 500, you can see there's a head and shoulder pattern also playing out, and we actually already broke below that neckline. And what you can see here is now we've closed on Friday at the retest of that neckline around that $286 to $287 area. And that to me is showing us that we're at a critical time, not just for the major indices, but alongside gold and Bitcoin, because of course, gold decided to close the week at new yearly highs at the same time that the SPY decided to close the week at this critical neckline, because at the end of the day, you have to realize that there's only two options when we come to Monday and Tuesday of the opening next week, and that's we're either going to go ahead and gap above this neckline to invalidate the head and shoulder, or we're going to be rejected. And if we're rejected, then the whole focus goes towards the storage of value assets. Of course, we saw early March, everyone went to the US dollar, and of course, gold, Bitcoin, commodities all started to fall. But this time around, we know that a lot of investors have already secured their positions in these hedges. And if this does start to break down and get rejected as we open on Monday and Tuesday, then there's a high chance that we're going to see more liquidity flow into gold and potentially even Bitcoin, depending on what Bitcoin decides to do at this resistance level. So realize that we're at a very critical point, and we're most likely in the most crucial week for gold stocks and Bitcoin thus far. And at the end of the day, you have to realize that Bitcoin has followed a lot of the same patterns that gold followed as it started to come up and test that $10,000 level. One of those things is this dump that occurred last week after we went above 10,000 briefly, and then we came all the way down to retest the 100 and 200-day moving average, which I mentioned and was very clear about. If we're above the 200 and 100-day moving average, especially with Bitcoin, then we're still going to be considering this a bullish trend. Once again, what looks like a duck and what walks like a duck is typically a duck. So it's the 80-20 rule. And if we apply the 80-20 rule to the current trend, Bitcoin is still in a very bullish trend because we only came down to test those moving averages, and that's normal market behavior. And so understand that if Bitcoin were to follow gold, then we can expect that $10,500 level to be the next level for Bitcoin. And then from there, we have to decide whether or not this is a real bullish trend. And from there, that could take us to 11,800 to fill that CME gap and potentially higher. But it's all going to happen, in my opinion, over the next week or two, knowing that we're at such a crucial time in the markets. When we look at Bitcoin dominance, interestingly enough, as we talked about, we approached this resistance. We're still above all three moving averages, so we can assume Bitcoin dominance is still the main player in the crypto market. But over the short term, over the next few weeks, there's a potential for some altcoins to start seeing some momentum to the upside, because as you can see, we did find resistance at this key macro structural level. And of course, you can see it was rejected at that resistance level. And now we're starting to see some altcoins like Ethereum see some bulls come in and bring price action to the upside, with Ethereum over $200 right now. So realize that we're at a very critical time. And for us to just immediately break out above 9,700, to me, is going to be the confirmation that we are really in a bullish trend right now, because of course we've got this flag forming, and a breakout of that flag to the upside could certainly take us to that $10,500 level. So I've got some really interesting on-chain metrics we're going to go through. So we're going to take a little bit of a detour from what we usually cover, because I've got a lot to talk about. As I mentioned in the beginning of this video, there's a lot of bullish and bearish puzzle pieces on the table right now. And that's why, for those that keep talking about whether or not it's a good time for a long-term position in Bitcoin, I'm away from the opinion that it's a good time in a risk to reward sense, but I'm leaning into the opinion that it's always a good time to dollar cost average into assets like Bitcoin and gold, which could act as a hedge against other volatile assets like the major indices and equities, right? So realize that we've always preached Bitcoin as a very bullish long-term hold, but of course, in the medium and short term, I believe things are still very uncertain until we have more confirmations that this is a bullish trend, because of course, gold and Bitcoin haven't correlated for a while at this point. And when we look at the major indices, Bitcoin is decoupled from them as well. And so until Bitcoin can confirm a correlation, then we can't necessarily utilize gold and traditional markets as a correlation for now until we start to see market structure correlations, which of course, if Bitcoin does continue to the upside and break that $9,700 level, which could confirm that we're going to go to 10,500, then we could assume potentially that we're back to the correlation of gold and Bitcoin. But until then, the weekend is all about manipulation, and until the market opens Monday and we see how the next week plays out is when I'm going to make more confident assumptions on the overall short and medium term for Bitcoin, because once again, we're going to go over some on-chain metrics, and there's a lot of bearish and bullish puzzle pieces on the table. So to kind of move forward and talk about the major indices, of course, there's not much to look at other than the fact that we're testing this neckline. And so the SPY is really going to be in an interesting position as markets open on Monday to see, are we going to gap up and this head and shoulder is going to be invalidated, or are we going to be rejected? And if that's the case, then we're going to really look at the other assets like Bitcoin and gold to see what their reaction is to that, because of course that would make us assume that there is lower levels potentially in the horizon for the traditional markets before we continue to the upside. And that's highly probable with all of the things happening right now as a global economy going through this global pandemic, right? So realize that we're going to go through some on-chain metrics as I've talked about here. And the first one I want to talk about is Bitcoin number of addresses holding over 100 coins here. It's reached a new 5-year high on May 14th. And interestingly enough, the last time we saw a 5-year high for the number of wallets carrying over 100 coins on Bitcoin was September 25th, 2019. If you look at this chart, September 25th is right here after a major dump that eventually turned into this bullish flag that then took us above 10,000 US dollars. So that's one of the puzzle pieces on the table. That's an extremely bullish puzzle piece, because as you can see, the last time we hit a 5-year low when it comes to wallets holding over 100 coins, Bitcoin started this bullish flaggish pattern. It consolidated for quite a bit, all the way from September 26th to around October 26th. So almost a whole month of consolidation after that happened, until we then saw a major violent push to the upside above 10,500. Of course, that was short-lived, and then we eventually formed lower lows up to that $6,400 level, which we know became a very critical point for Bitcoin on the way up recently. And then, of course, from there, we even went above 10,000 once more before seeing another low. So in my opinion, that's one bullish on-chain metric right now that's on the table, and it's the fact that Bitcoin addresses holding over 100 coins right now have hit a 5-year low on May 14th. And of course, if you look at May 14th, you can see May 14th was right here when we came up and almost tested that $10,000 level once again. And so are we going to see another consolidation, a possible bullish flag consolidation along this resistance level before we continue up? That's very highly probable. Of course, if we're staying at this area here, this major resistance level for quite some time, a whole month, for example, then that's almost an obvious trait of being bullish. So I just want to throw that on the table. That's one on-chain metric. And now there's another on-chain metric I want to talk about here, and that's going to be the Bitcoin exchange net flow hitting a 3-month low on May 13th, right? So the Bitcoin exchange net flow hit a 3-month low on May 13th, and the last time that happened was on March 19th, which you can see is this blue line right over here. And interestingly enough, that was when Bitcoin's price was around that $5,000 to $6,000 level, and from there we only continued the trend up. So that's another bullish puzzle piece on the table that I just want to put out for you guys as an umpire, taking a step back and looking at the market without a bias and showing you that the Bitcoin exchange net flow has hit a 3-month low. And the last time that happened was May 13th when Bitcoin was around $5,000 to $6,000 US, and we only continued up from there, right? And of course, we eventually saw that $10,000 level all the way from around $5,000 to $6,000. So another bullish on-chain metric on the table that I want you guys to keep in mind. Now, check this out. This is a little bit more interesting to me. So you look at total transaction fees. Here's another on-chain metric for you guys. I'm going to just put out a bunch of bullish and bearish puzzle pieces that I've found over the last few days because I think these are extremely important as we head into one of the most critical weeks for Bitcoin, gold, and stocks. So the total transaction fees skyrocketed here, as you can see on May 14th, at 1.539 million. So you can see over time, typically Bitcoin total transaction fees consolidates and stays quite neutral. It's almost like a volatility chart when you look at the traditional markets, right? It's almost like looking at the VIX, but we're looking at that for Bitcoin. You can see it's almost like a volatility chart for Bitcoin. You can see we immediately spiked up out of nowhere. And of course, we're only seeing data up to May 14th. So what I decided to do is look at what this potentially means. And the last time this happened over the last year was around June 26, 2019. You can see we topped out here and it was just a random spike after forming a higher high, another higher high, and then a spike. You can see higher high, another spike. And so interestingly enough, when we look at what occurred here on June 26, 2019, what you can see here is June 26, 2019 was actually the top here when Bitcoin topped out around 13,700. And from there, we only saw lower prices. So I want to just put that out on the table. Now, something that you could assume from that on-chain metric is, okay, well, we don't know where the top is for the total transaction fees because it's just starting to break out, right? It's almost like trying to predict a top. We don't know where the top is. So we could potentially assume that we're not yet at the top. We're going to see even higher total transaction fees and higher Bitcoin price levels. So I would say this is not just a bearish or bullish puzzle piece, but it's just a puzzle piece and it's a neutral one, right? I think it's a very important one, but I definitely would say it's not bearish. It's not necessarily bullish yet, but it's definitely a puzzle piece knowing that we saw a random spike after 2 higher highs formed. And of course, this is almost like a volatility index for Bitcoin. And we know that when we topped out here on June 27, June 26, that ended up being the top for Bitcoin when we were on that $13,700 level. So of course, the total transaction fees chart was going up throughout this whole period of this uptrend. But of course, eventually it topped out and it marked the top of price action. So another on-chain metric, I wouldn't say it's bullish or bearish, but I would definitely say it's on the table. Now check this out, miners revenue, right? The Bitcoin halving just passed and a lot of people are talking about the potential miners capitulation. And when we look at the miners revenue chart, you can see a huge dip here after the Bitcoin halving, right? And you can see May 12th, we bottomed out, at least what it looks like is the bottom for now, in miners revenue. Now, I'm like, okay, well, if that's the case, why don't we look at the time that previously happened? You can see the last time that happened was March 17th, 2020. So we go back to this chart and we look at what happened on March 17th. That's going to be this orange vertical line here. Guess what? That was pretty much the bottom for Bitcoin. That's when Bitcoin was around 5,100 and it was actually dipping into the 4,000s at that time. So another on-chain metric, another puzzle piece on the table. I'd love to hear you guys' thoughts on the YouTube live stream. See, we've got Brandon, Nicholas, Selmar, Investor Milton on. Good to have you guys on. Make sure to like the video if you guys appreciate this content late at night. Sometimes I debate whether I should go live so late, but I'm trying to get my schedule a little bit earlier. But of course, when I'm doing research and I see so many things that are interesting, I want to cover them. But of course, we're going to make sure that we do our 3 live streams a week as always. But I think this is a very interesting on-chain metric here. The March 17th candle here was pretty much the bottom. And that's when we saw this similar on-chain metric here where miners' revenue plummeted. And of course, from there, we only saw higher prices for Bitcoin. So one reason for that could be the fact that now that Bitcoin has cut its supply, its miners' block reward to 6.25 from 12.5, that now the price has to go up in order to cover the mining fees, right? So that's almost like what happened here where miners' revenue dropped and they had to bring price up. Now the question is, are the miners selling right now because their revenue is so low and they know price is quite high, or are they going to have to bring price even higher and we're going to see the true and actual effects of the Bitcoin halving happen over the next few weeks? Or is it going to happen like the last two halvings in 2016, for example, where we went sideways, we actually saw a little bit of lower price levels, and then we eventually curved up and then hit 20,000 during that 2017 and 18 rally, right? So the question is, are we just suddenly going to start going up because miners need to cover their fees? Or are we going to see a dump as we've seen from the last two Bitcoin halvings? I think the first one, we kind of just went sideways. It wasn't too much of a dump. We saw a big dump pre-halving, but of course, we just know that we've never just randomly seen a push to the upside, a huge bullish buy, buy pressure come in after the Bitcoin halving. So I think that's another very interesting on-chain metric. And then check this out, cost per transaction. So this is a 3-year chart. If you look at the 1-year chart, you can see a pretty significant drop here in the cost per transaction. So the reason I pulled out a 3-year chart is I wanted to look at when the cost per transaction during the 2017 and 18 rally dip down like this, what happened to price, right? So we want to compare this to this downtrend. The reason I want to compare it to this downtrend is we're in a very similar downtrend right now where we're seeing a lot of these lower lows form. You can see a lower low November 25th, another lower low March 16th, and then of course we just formed another lower low on May 12th. Now, interestingly enough, what I wanted to look at is what happened here on February. You can see here, February 5th, 2018, we went from lower low, lower low, lower low, and then we dipped. You can see very similar here. We just dipped here, cost per transaction. So let's go look at the chart here. February 5th, 2018, we look at the chart, and what you can see here is on February 5th, 2018, we actually saw cost per transaction dip, form a new lower low, and then guess what? Price action from 6,500 all the way up over 11,000, up to around 11,700. So another bullish puzzle piece on the table. And so if we were to go by the 80-20 rule, of course, and say that, okay, based on the puzzle pieces that are on the table and based on the 80-20 rule, since there's more bullish puzzle pieces, we can assume that we're in a bullish trend that has yet to see the top. Now, I want to be cautious when I say that because realize that a lot of markets right now are extremely irrational, especially when we look at the major indices, right? Like the NASDAQ, pretty much at the same levels or if not higher than they were pre-pandemic. And we all know that a lot of companies have suffered during this time. So remember, there's that duck on the table that can potentially have a mask on, and we always want to be aware of that, and that's why we want to wait for confirmation. And so that's why, as I talked about earlier, the fact that we're forming this flag pattern after this push above this major resistance level, just like we did here, we want to wait for this confirmation before assuming higher price levels. So you can see this one eventually led down over the weekend. This one, we don't know yet. So if we break that $9,700 level, that to me is confirmation that we'll easily come up and reach that $10,500 level. Now, why wait for confirmation? Because realize that we could easily repeat the pattern that happened here and come right back down if we break this flag to the downside. So it's very important right now to watch for confirmation, in my opinion. And that's why we're being very careful with how we approach our trades right now. So total hash rate, I wanted to just bring this up briefly. You can see we're seeing this big drop post halving. Of course, a possible miners capitulation, who knows? I just want to throw that on the table. There's not much to tell from this data. This could just be another higher low forming. Of course, we don't know until we start to see this data unfold. We only have data up until May 14th right now, but I do want to put this on the table. So other than that, I do want to look at unemployment rates. We just had that released here yesterday. You can see 2.9 million unemployment jobless claims last week. And of course, this was actually above the expected 2.5 million. So realize that we're at a very dire state economically, and that it's very irrational to see a lot of these assets see the type of price action and price levels that they're seeing. But at the end of the day, it's all about what asset we're talking about, right? Because Bitcoin is not only a volatile asset, but also a storage of value. We don't know yet. Is it going to come back and couple with gold? And of course, now that we know that gold wants to continue its bullish trend and it's continuing to the upside, it broke this bullish symmetrical triangle, then there's a high possibility that Bitcoin can continue up if it recouples with gold. So a lot on the table, a lot to watch for. Unfortunately, a lot of this has yet to unfold, but the one thing I will say is to be very cautious over the next week. I think it's going to be one of the most crucial times in the market. And of course, you want to be prepared and you want to wait for confirmations before making assumptions of where assets are going to head during a time like this. Chris says, Bloody Monday coming. I'm calling it. You know, it's highly probable. Once again, when you look at the SPY, it came up and it closed here at the neckline. Typical market behavior for any sort of head and shoulders to come back up and test the neckline. There's two options here. We either get rejected or we gap up above and invalidate the head and shoulder. I think the majority of all of this is going to come and be based upon what happens to the S&P 500 as Monday and Tuesday unfolds. I think that's really the biggest thing here, because realize that if we gap up above and it invalidates the head and shoulder, then gold could certainly come back down. Bitcoin can come back down and it actually might go up. I mean, who knows? It hasn't been correlating with the major indices yet, at least as of the last week or so. But at the end of the day, we have to realize that if this gaps up, then that could change the scenario. But if we're rejected, then we can confirm that this lower high that formed is the start to a potential trend back down. And then we can start looking at whether or not we're going to come back down, retest the lows, potentially see new lows, or just come back down and maybe retest the 265 level that a lot of people are talking about, or whatever it might be, right? So a lot of this is going to have to do with what happens to the SPY as Monday and Tuesday unfolds, because as we know, gold decided to close today with a breakout from its bullish symmetrical triangle, the same time that the SPY came up to test its bearish neckline of the head and shoulder that has been forming here. And so that doesn't just happen for no reason. That happens because it's normal market behavior. Gold is supposed to act as a hedge. And now the real question is whether or not Bitcoin is going to decide to come back up and recorrelate with gold and become a true storage of wealth, a storage of value, as we all have heard it to be. And so I think that's the biggest thing to watch for here over the next few days. So I hope you guys enjoyed this content. It's very late, so I'm not going to go through too much questions from the live audience. Burva says, this is great content. Thank you. I say we go up to 10,500 before heading down. Very probable. A lot of my buddies that have a lot invested in this market and own hedge funds in the crypto sphere are waiting for that $10,500 level for confirmation, because a lot of them are saying that this is just a potential delusional rally, just like the NASDAQ and stock market. That could be very probable. Who knows, right? With 36 million jobless claims over the last 2 months, anything can happen. This is the type of environment that we've never experienced before, and therefore we have to take a very precautious approach to it. We all know the US dollar, if we were to pull up that chart, it's been maintaining its value quite well. I'll go ahead and pull up the DXY here just really quick to show you guys how the US dollar is coping with everything here. And as you can see here with the DXY, the US dollar compared to most major currencies consolidating very well, not seeing too much volatility, which is typically where investors like to hold the majority of their capital. It's in an asset that isn't too volatile and is able to maintain its value. Of course, the dollar proving that. And so there's a lot on the table right now. And I think that the next week, as I've mentioned, is going to be the most crucial in the macro when it comes to Q1 and Q2 of 2020. And so Abe says, are you seeing a drop, Naeem? It's highly probable that we see some form of a consolidation, and I'll talk about that here as we wrap this video up. But once again, a lot of this is going to be determined on whether or not Bitcoin decides to break up above 9,700. If that's the case, then we could definitely see higher levels. and not come back down until potentially finding resistance at 10,500. But really, from the looks of it, if we come up to 10,500, then it's game over. Bulls are in control. We can head up, fill the $11,700 to $800 CME gap, and then, of course, continue higher from there. And that's all going to depend on whether or not we have that confirmation of that bullish break to the upside. But until then, realize that the biggest resistance level right now is going to be this right here, this very dark black line here in bold. And of course, you can see we're bouncing back up and above that, just testing the bulls and bears patience. Of course, I think there's going to be a lot of short and long opportunities here. But the question is, if Bitcoin decides to break 9,700, are we now correlating back with gold? If that's the case, then we can expect extremely bullish price action over the next few weeks, because as we all know, a lot of this is going to come down to how the traditional markets open on Monday and Tuesday, as we are at a very, very key level. So thank you guys so much for watching. I don't want to go too far. As I've mentioned, it's 3:43 a.m. and I appreciate all of you guys watching. And